Hello and good morning, everyone. Welcome to another episode of the Market Snapshot series. My name is Rufus Kamau, Markets Analyst at FX Pesa. So today we'll be talking about quite a number of things. One of them being the US Producer Price Index, which is a data point that we're expecting later in the afternoon. We'll also be talking about US President Trump's push to end the Russia-Ukraine war. So once we're done with that, we'll also be doing some technical analysis to try to understand the key market structures that are existing today as of this moment and try to understand where trading opportunities may lie. So as always, I would like to begin with a disclaimer that this session does not constitute investment advice. It's not a recommendation to trade, so you should always do your own due diligence. So that being said, I would like to begin with the economic calendar. So we try to understand what are the key data points that we already seen this morning and what we're expecting later in the day. So as you can see from the economic calendar, today being the 13th of February on a Thursday, we have already had quite a number of news that have been released in the day. So one of them being inflation expectations quarter over quarter for New Zealand, which slightly slowed down to 2.06%. Down from the previous reading of 2.12%. So on the other hand, German final CPI came in as expected at 0.2%, which was also the same case for Switzerland, where inflation came in as expected at negative 0.1%. So then we had a surprise increase in GDP in the UK, where the previous reading was a 0.1% increase. We expected something of the same level, 0.1%, and instead we got a big spike of 0.4%, which drove the UK pound higher. So there was more data coming in from the UK, including preliminary GDP quarter over quarter, showing a 0.1% increase. Construction output slowed down to negative 0.2%, while goods trade balance slightly improved to negative 17.4 billion pounds. Index of services quarter over quarter was up 0.2%. Industrial production was up 0.5%, which was a big change from the previous reading of negative 0.5%. So manufacturing production was up 0.7%, a big U-turn from the previous reading of negative 0.3%. So preliminary business investment quarter over quarter also had a negative outcome, negative 3.2%. Which was a drop from the previous reading where we had an increase of 1.9%. So clearly, the overall surprise was that the GDP was surprisingly higher, and this backed the strength of the pound today or as of 10 a.m. So going forward, for the rest of the day, we'll be looking at the ECB economic bulletin. This will be at 12. We'll be looking at Chinese new loans data. Then the most important data point for the rest of the day will be the US Producer Price Index data for both overhead as well as the core PPI. So for those who are new to these data points, I'd like to introduce you to the Investopedia website, which is one very good resource at explaining some of these economic terms and how they work and the importance they have in the markets. So Producer Price Index, what is it and how is it calculated? So the PPI measures the average change over time in the prices domestic producers receive for their output. It is a measure of inflation at the wholesale level that is compiled from thousands of indices measuring producer prices by industry and product category. The index is published monthly by the US Bureau of Labor Statistics. So the PPI is different from the Consumer Price Index, which measures the change in the price of goods and services paid by consumers. So the PPI measures inflation, or much less commonly deflation, from the perspective of the product manufacturers or service supplier. The price trends for producers and consumers are unlikely to diverge for long, since producer prices heavily influence those charged to consumers and vice versa. So in the short term, inflation at the wholesale and retail levels will differ as a result of distribution costs, as well as government taxes and subsidies. So the BLS releases the PPI along with its constituent industry and product indices during the second week of the month, following the reference date of the survey. It is based on approximately 100,000 monthly price quotes reported voluntarily online by more than 25,000 systematically sampled producer establishments. So the survey covers the entirety of US output of goods and about 69% by value of services. Its component product and services indices are weighted based on the value of the category's output to calculate the overall change in producer prices. So the PPI is used to forecast inflation and to calculate escalator clauses in private contracts based on prices of key inputs. It's also vital for tracking price changes by industry and comparing wholesale and retail price trends. So in most cases, you'll notice that when central banks are making decisions about monetary policy, they tend to rely on economic data, and a good measure of inflation, they majorly focus on consumer price index. So consumer price index basically measures a basket of commodities, goods and services that the average household in an economy consumes monthly. So this ranges from the price of healthcare, housing, price of beverages, food, clothing, and so on, including transport, airtime, and so on. So when you measure how much consumers are paying, you're able to tell how much prices have gone up or down within a specific period of time. However, if you're looking for a leading indicator, something that shows you the trends of how things may turn out in the near future, then in this case, you focus on the producer price index. So when producers, or rather say just manufacturers, produce goods, they sell these goods at a certain price level. And if you keep track of these prices, if these manufacturers are selling goods at a much higher price, then the distributors will most likely be selling to consumers at a much higher price. So in this case, you can easily tell that there will be likely higher inflation if producer prices move higher. On the other hand, if producer prices are moving down, then that could be translated to the consumer, and eventually we could also be seeing the consumer price index also going down. So as a result, it serves as a leading indicator of future oncoming consumer price index or future oncoming inflation. So uh, just a sec, looking for one more subtopic. Yeah, what does the producer price index predict? So the PPI looks at inflation from the viewpoint of industry and business. So this method measures price changes before consumers purchase final goods and services. So as a result, many analysts consider it to predict inflation before the official CPI. And that's why it's an important data point because investors and traders are trying to understand the trends in inflation. And they also know that the central bank of the US or the Federal Reserve will be focusing on the CPI. So when you have a leading indicator of the CPI, you can tell the direction that the trend is taking and use that to your advantage when you're making trading decisions. So normally, when there's an increase in PPI, it's taken as an expectation of increased CPI. And as a result, when you see increased CPI, we tend to think of these as a condition for the Fed, whether they are hiking or cutting interest rates. In this case, an increase in inflation would lead the central bank to hold rates higher for longer. So as a result, it's taken as positive for the dollar. So on the other hand, a drop in producer price index is expected to be negative for the US dollar. So outside of that, there is quite a number of things to be focusing on today. But before we move on, let's look at the PPI expectations. So for month-over-month data, we expect a 0.3% increase in January compared to the 0.2% we had seen in the previous month, which was December. So we're expecting a surprise increase in producer prices. And as for the core PPI, we also expect to see a 0.3% increase in the month of January compared to the 0.0% increase that we had seen in the month of December. So we also be looking at unemployment claims. We don't expect much of a change. In the previous reading, it was 219K. and in this case, we're expecting 217K. So outside of that, what are the other news that are currently impacting the market? So if you look at the major highlights, the number one news is that the UK GDP unexpectedly grows. Euro strengthens on US-Russia talks. European markets poised for strong open. Australia inflation expectations rise to a 10-month high. Brent crude oil holds decline. Japan producer prices rise most in 20 months, and US inflation rate unexpectedly rises to 3%. This was the biggest data point yesterday, where the markets were expecting 2.9% US inflation or CPI, but then the consumer price index showed an increase of 3% year over year, and this caused a lot of volatility in the markets. So outside of that, if you dig deeper into the UK GDP growth rate, the British economy expanded by 0.1% on quarter in Q4 2024, following no growth in Q3 and meeting forecasts of 0.1% contraction. So according to the preliminary estimates, on the production side, the services sector increased by 0.2% and construction grew by 0.5%, while production fell by 0.8%, marking a fifth straight quarter of contraction, largely driven by a 0.7% decline in manufacturing, mostly transport equipment and pharmaceuticals, and a 2.5% decline in mining and quarrying. So on the expenditure side, exports were down 2.5%, mostly due to fuels and machinery and transport equipment, while imports rose 2.1%, driven by large movements in non-monetary gold. Also, gross fixed capital formation declined 0.9%, led by transport, which was down negative 22.9%. So as you can see, one of the key highlights is that there has been large movement in non-monetary gold out of the UK, and this has been one of the key drivers of the strong rally we are currently seeing in gold. So outside of that, there is even more news in the markets this morning. One, Alibaba chairman confirms that there is an AI partnership with Apple for Chinese iPhones. So Chinese iPhones will now be getting an AI upgrade through a partnership between Apple and Alibaba. So this is good news for Apple. We could be seeing more sales in China, which has been one market that Apple has been really struggling to make or compete in the smartphone business against other Chinese manufacturers. So outside of that, there's the update on Grok. So though Grok is not yet a publicly traded company, we are closely following it since it's one of the top leaders in the AI development. So Elon Musk says Grok 3 in final stages outperforming all chatbots. So Elon Musk said on Thursday that his AI chatbot and ChatGPT challenger, Grok 3, is in the final stages of development and will be released in about a week or two. So we'll be eagerly waiting to see how this may impact the markets, especially after the release of DeepSeek caused a big sell-off in US tech stocks, especially Nvidia. So on other news, most economists expect the Bank of Japan to hike rates in latter half of 2025, survey shows. So most economists expected the Bank of Japan to raise short-term interest rates again in the latter half of this year. A monthly survey on economics conducted by private think tank Japan Center for Economic Research showed on Thursday. So in the survey of 36 economists conducted between January 30 and February 6, 30 said they expect the Bank of Japan to keep interest rates steady at 0.5% in the first half of 2025. The remaining 6 projected a hike to 0.75% during the period. So the survey showed 28 economists are forecasting a hike to 0.75% in the latter half of this year. 2 of them expected rates to stay at 0.5%, while 6 saw rates going up to 1%. So clearly, there's an expectation that the Bank of Japan continues tightening policy and hiking rates. And as a result, we have been seeing the Japanese yen continuing to strengthen in the markets. save for this week where we have seen some reversals happening. So also on the same, Japan's wholesale inflation jumps, reinforcing Bank of Japan rate hike bets. So Japan's wholesale prices were up 4.2% year over year versus a forecast of 4%. And when you see prices going up at this level, then it calls for the central bank to do something. And in this case, the expectation is that the Bank of Japan may respond by increasing interest rates, whether it's in this half or the second half of the year. So also, another news or market updates, US consumer inflation increases at the fastest pace in nearly 1.5 years in January. So consumer prices were up 0.5% in January. Shelter, food, gasoline lead broad rise in prices. Consumer price index rises to 3% year on year. Core CPI gains 0.4%, advances 3.3% year on year. So US consumer prices increased by most in nearly 1.5 years in January, with Americans facing higher costs for a range of goods and services, reinforcing the Federal Reserve's message that it was in no rush to resume cutting interest rates amid growing uncertainty over the economy. So the hotter than expected inflation reported by the Labor Department on Wednesday was likely partly due to businesses raising prices at the start of the year, evident in a record surge in the cost of prescription medication and an increase in motor vehicle insurance. So more on that will be available. Of course, if you'd like to go through the article by yourself, I'll be dropping a link in the comment section so that you can go through it on your free time right after this session. Kindly give me a sec. So another news, looking at the breaking news this morning, I'll be starting with what's happened in the morning. So of course, we've talked about the UK GDP leading to strengthening pound against the dollar, manufacturing production, all these we already covered on the economic calendar. Swiss CPI having an increase to 0.4%, but lower than the 0.6% expected. There was a big spike in the Swiss franc against the dollar. Then there is traders trimming the Bank of England bets after GDP. They see 56 basis points more cuts this year. So they expected more, and now they expect less rate cuts. And as a result, we are seeing the pound rebounding. And of course, the market updates for this morning. The dollar fell against G10 currencies as the likelihood of an end to the conflict in Ukraine dampened. So, dampened demand for safe haven assets. So, yesterday, Trump released an update saying that he was on a lengthy phone call with Russia's President Putin, where they talked about a wide range of topics, key among them being plans to end the war between Russia and Ukraine. So he proposed ways to negotiate, appointed a team from his administration to begin negotiations immediately. And already there's a likelihood that Trump will be meeting Russia's President Putin in Saudi Arabia to discuss further. And of course, he's also decided to be speaking with Ukraine's President Zelensky to try and negotiate and get a way out of this war. So, with Trump being very positive to the markets, meaning that investors trust what he says, there is that expectation that he'll go through with the promise to end the Russia-Ukraine war, and this will remove a lot of premium from various markets. So if you remember correctly, when the war started, one of the currencies that were most negatively affected by the war was the euro. And now we are seeing the euro rebounding quite strongly immediately after Trump started this talk of getting the war to come to an end. So the euro is responding very positively to this news. So also European equity indices have hit new all-time highs this morning. So also European companies might be benefiting from the end of this Russia-Ukraine war. So on the other hand, the demand for safe haven assets was really high based on this war. There was a premium on gold, there was a premium on the dollar index, and now we are seeing both taking some steps backwards as a result of this new market development. So now as we head into some technical analysis and try to understand what are the prevailing market structures, try to check on some of the comments that you guys have already raised, and then we progress further. So morning, Lucy. Thank you for joining the session. I can see a comment from Wimab Nutrition. Maureen, good morning. How did Jerome Powell's testimony affect the markets? So there was nothing much of a change. Jerome Powell basically said that we are not there yet, in that his biggest fight is against inflation. And of course, he had expectation of yesterday's report, which came in higher than expected at 3%, which basically means that Jerome Powell is still sticking with the same policy, where if inflation hasn't significantly moved towards the 2% target, then the official policy is to continue holding rates higher for longer. So we could continue seeing rates remaining higher for longer in the US, and that would likely lead to the dollar being strong. And of course, the Trump's tariffs have been seen to strengthen the dollar, so that could be a continuing feature. So good morning, Osports TV, Teja Malwa. I can see Charles Palmer, Lincoln, Violet. Thank you guys for joining. So there's a question on USD trading against the Swiss franc. We'll be checking on that. Good question here. Hello, I see there are many websites you use for markets. So which is which that can house all the information? No, there's no one centralized website for forex trading. You still have to do some research, and that research requires you to go through various websites. Among them, you can look at data aggregators. So data aggregators are websites that will collect backlinks from various other websites. So you only see highlights from them, and when you click on those links, they redirect you to the specific websites. So an example of a data aggregator is Yahoo Finance. So if you go to, let's say, Yahoo Finance, you'll notice that they have so many articles at any given day, but most of the articles are not per se published on Yahoo Finance. They are basically scraping the web, looking for relevant information. So also you can try out the FinViz website. So the FinViz website kind of does the same thing. So if you go to their news section, you'll see a highlight of the top market updates for the particular period. I don't know if I can show you this quickly. So you go to FinViz website, you click on the news section, then you'll see news as well as blogs. But if you look at this news, it's only aggregating some of the top news in the market. So for instance, the first news item is from Yahoo Finance. Meta is winning over Wall Street while the rest of big tech struggles. There's a Bloomberg article, stocks rise on US-Russia talks. Pound strengthens market trap. So you'll see the Times and many other websites, and all these are backlinks where you can click and you are redirected to the news item. So on this other side, you have blogs. They also scrape the web for blogs. So whenever there's more blog updates, then they will be reposting them here, and you can see some of the top blogs, including Seeking Alpha, where they post market updates. So that's one of the ways you can approach that. So good comment here and question from Wangari. Market sentiment, fundamentals, testimonies by Powell, Trump actions, except where he said that rates should be cut, and data released all point to a very strong USD, but this is not happening. Why? So the markets are responding more to Trump than Powell. But then when it comes to hard economic data, it's difficult to argue with. So for instance, when you see inflation at 3.0%, nobody is going to be arguing with that one. So the overall expectation is that once we got the CPI data yesterday, then the overall expectation is even Trump would eventually backtrack and support holding rates at the current level, at least for a longer duration of time, until inflation starts moving significantly towards the 2% target. So while Trump really wants to see low interest rates in the US, this might not be possible as of this moment, but then at some point we could be seeing this changing if inflation was to move to the downside. So whatever he's doing with oil eventually is going to have some impact on consumer prices. So if we continue seeing oil, let's say weakening or moving further back downwards, like we experienced yesterday, then the overall impact of this might have something to do with consumer prices slowing down. So of course, on the long run, Trump wants lower interest rates, but for now, the Fed Chair Jerome Powell might have to hold rates higher for a bit longer. So morning, Robert Kovale, can see Koril Naftari, Hassan Muridi, and Shui. I'm assuming that's the right pronunciation. So thank you guys for joining. So let's do some technical analysis as promised. So I'll be sharing the MetaTrader 5 trading application, which is the app that we use for trading. And on this one, we'll start with the dollar index, which had quite a negative performance yesterday in the evening. Continued dropping this morning, but right now it seems to be bouncing quite strongly. So if you use the 15-minute chart, you'll notice that the majority of the Asian session, the dollar index was on a big drop, and this morning we are seeing some form of recovery. So clearly, the London session may likely be positive for the dollar index after a big sell-off during the Tokyo and Sydney sessions. So in this case, when you see price action like this, then you might expect that the dollar index will also be strengthening against other currencies. But in this case, for Switzerland, we are seeing a big sell-off in the dollar as the Swiss franc continues to strengthen. So the strengthening of the Swiss franc is based on the expectation that the Swiss National Bank may hold rates higher for longer or even consider hiking, considering that inflation is moving to the upside again. So the big surprise increase in inflation in Switzerland may cause traders to bet higher on higher interest rates, and as a result, strengthen the Swiss franc. So this explains the current movement that we are seeing here this morning. So for New Zealand USD, we're also seeing the dollar strengthening against the New Zealand USD. So clearly reversing the early morning gains that the New Zealand dollar had made against the dollar. So now with this kind of reversion happening, then the immediate target becomes 0.56281, which is a bottom that we saw last week. And of course, the lowest price that we saw yesterday could also be a nice price target if the market breaks the last week's low. So looking at other markets on the majors, Euro USD, we had a very strong euro, especially yesterday in the evening. So also this morning, the euro continued its rally against the dollar. But then now that we are seeing the dollar resuming strength, it's more likely that the market is reversing yet again. And in this case, we are seeing euro short sellers or perhaps some profit taking happening, and the euro is resuming the bearish momentum after hitting a key level resistance. So we could be seeing the market moving further back downwards towards 1.0359. So as for the pound, with its positive GDP, better than expected, there was a continued spike, but now with the dollar strengthening back again, we are seeing a main reversal here. So clearly indicative that the dollar is in control here, and the markets are not yet done with betting on Trump. So looking at the open price of the day, we could be seeing the market erasing some of these gains that it had made in the Asian session. And perhaps as we approach the New York session, we could be seeing the pound moving further down to 1.24435. So for the Australian dollar, it's the same case, rejection of resistance, and now with the strengthening dollar, would be seeing the market retesting yesterday's low. And then for the USD JPY, remember, we have been looking to short as the Bank of Japan continues hiking rates. And now we had 3 consecutive days where the dollar was gaining against the JPY. But then upon hitting this resistance area, we have seen the market really struggle to break. And now we are seeing potentials of the market reversing. So since yesterday in the evening, this market has been attempting to reverse. Hasn't made much of a change, so it's looking more of a flag, but then there is that likelihood that we'll eventually see a break, especially if the market breaks this lower trend line here. So we'll be observing this area here to see the potential for a break and potential for short selling positions with the levels such as this one being on the books, and if the momentum is strong, then the previous low also being on the books. So the Nikkei 225 index, negatively correlated with the Japanese yen, has also been gaining pretty well this morning. So ever since bouncing from the lower trend line here, which is something we talked about on Monday and on Tuesday, we saw the market accelerate higher, and this has continued to be the key theme. So on the 4-hour chart, we remain within this range. But then after bouncing strongly here at the beginning of the week, all we have been seeing is a positive momentum in the Nikkei 225 index. So gold, on the other hand, we talked about these on Monday and on Tuesday, that prices were more likely to bounce from this area here. So we were expecting the market to bounce from here. It failed. So we mentioned that it might go down to this area and then find support and bounce from that area. So it played out for quite a number of hours on Tuesday. But then on Wednesday, it kept going down and then formed this very interesting candlestick, indicating a very strong rejection of lower prices and an entry by buyers. So since then, we have seen an acceleration of prices towards the previous all-time high that was formed on Monday, and that's a price level of 29.43. So clearly yesterday was a pretty bullish momentum in the evening, and now this morning we also continued seeing this bullish momentum. So remember what I said, gold had been trading at a premium as a result of the Russia-Ukraine war. So an end to this war would eliminate bets on a safe haven asset. However, the long-term trend in gold is being determined by the forces of demand and supply, and there continues to be a shortage of gold bullion in the London, UK market, as well as some other Asian countries such as South Korea. So in this case, even if we see a pullback here, the idea is that the market still goes for the same projections. So what this means is that even if we are seeing some form of pullback playing here at the start of the London session, at some point we expect to see the buyers come in and drive prices higher towards the previous all-time high around 29.43. So this should not worry you a bit. Just be patient and wait to see signs of buyers coming back, because the long-term trend is being determined by an increase in demand that is not matched by supply. So Brent oil prices, we talked about the rally on Monday and Tuesday. So while prices were moving higher and higher on Monday and Tuesday, we marked these two levels. So the first level that we marked was on this area here. I remember doing this on Tuesday. And also we marked this other area here as potential areas where prices could potentially reverse. So on Tuesday, there was a real struggle to break above these areas here. And then yesterday, prices gently started dropping and the sell-off was really strong. So this was extended in the Asian session this morning as we continued seeing a big sell-off in oil prices. And since the previous high that we saw on Tuesday, oil prices have dropped by around 3.72%. And of course, the current pullback means that we are down 3.24%. So this is expected to be the overall trend in oil, where prices continue dropping as a result of Trump's policies, where he's pushing for increased oil production, and as a result, the markets are betting on prices moving further downwards. So this has been the key trend. So while we may have started the week on a positive note, just the price action of yesterday erased all the gains, and now we are looking at the market retesting the previous support, and the previous support area is $73.921 per barrel, and potentially breaking below that and moving further back downwards. So we could also be seeing the market going for these levels, and the level is all the way down to around $71.818 per barrel of oil. So US equity indices are currently on a sell-off. This is happening in early morning trading, so we could be seeing an extension of the bearish momentum after the strong bounce yesterday. So this is the Nasdaq 100 index expected to trade further downwards. So the US 30 or the Dow Jones is also expected to be doing something similar, dropping further downwards, following the data that we saw yesterday, which indicated that rates may continue staying higher, as inflation is now a much bigger problem than earlier anticipated. So in this case, we expect to see some further weakness in US equities. So Russell 2000 had one of the biggest drops yesterday. So after some recovery, today we are seeing the market attempting to move further downwards. So we could be seeing a further drop to previous lows. So at least some form of bets towards the lower side. US 500 also doing something similar. So we could be seeing the market gunning for lower prices with a potential of the market dropping to $6,009 per share. So Bitcoin is also having a big sell-off from a high that we saw this morning. This was around $98,000, and now we are down to $96,000. So that's about 2K, and we could be seeing the correlation happening between US equity indices and Bitcoin, and prices moving further downwards. So on the European equity indices, there is the Spanish IBEX, which opened with a gap. So this morning, it has already closed the gap, and now we could be seeing a continuation higher. So the idea is whenever you have these pullbacks, you start looking for signs that buyers are coming back into the market and continue following the trend upwards. So the EU 50 also had a pullback, but the overall expectation is a higher price action. As of this moment, we still had a new all-time high. So the French 40 also had a gap at market open. So notice how we have closed this gap. So now we are looking for signs of bullish entry. So similar to this, market pulls back downwards, leaves a strong tail here on the red candlestick. And then on the following candles, you start seeing buyers coming in, which basically gives you the indication that now the market momentum is changing, and now we are facing upwards. So we could be seeing something similar playing out today, similar to yesterday, and the bullish momentum could be a nice opportunity. So I remember on Monday and Tuesday, we talked about the German stock market index being one of the best assets to be looking forward to trade this week. So far, since the week started, you'll notice that the market opened here. And today, being the fourth day of the week, it was up 3.65%. And this was quite a significant gain, in that we captured it before it even happened. And now we are seeing a very strong take profit happening here. So in such a market where the trend is particularly very strong, the market is just forming new all-time highs. And now we are looking at an end of the Russia-Ukraine war, which is positive for European equities. Then the idea is to be patient, wait for the market to do what it does best, form some form of pullback here, and the idea will be to look for bullish positions. So bullish positions could emerge at any level. Don't know yet where they will be emerging from. So the idea is to still look for bullish positions when this plays out. And then once you see buyers coming back in, then you execute your buy trades. So for now, it's a wait and see kind of scenario, but it has been a quite good rally since the week started. So on other news, we've seen Trump coin make a big jump early this morning. Of course, we don't expect this to be sustained. the overall trend since he dumped on people, we expect some further downside momentum. So even if there was a certain jump in this morning, the overall expectation is that the price further moves back downwards. So that's it for the day. We also have what else? So Chinese equity indices also facing some strong resistance. You can see the bearish engulfing here on the resistance area, similar to the previous high that we saw on Tuesday, indicating that the market could be reversing from this area and moving further downwards as the market continues trading in a range. So in this case, the expectation is that the market moves further back downwards. So this has been the range. So for those who know the range, it's more of a sideways momentum. And the market is just bouncing off the upper trend line, which represents an opportunity to go short yet again. The Hang Seng Index also facing a very strong reversal after making some good gains earlier in the morning. So from the 15 minutes chart, you can already see that this is a big reversal from the earlier gains. So from the 1 hour chart, this is how it looks like. So we could be seeing some further downside momentum, perhaps towards this support area at 21,306 Hong Kong dollars per share. So that's it for the day. I'll be checking the comment section before I end the session. So there was a request to check on USDN on the German 40. We already did this. There's a request to check on Audi CHF. So kindly note that we always try to avoid repeating this, because when we talk about Audi CHF, we already looked at the Australian dollar against the US dollar, and we have looked at the US dollar against the Swiss franc, and the Australian dollar trading against the Swiss franc is a derivative of the two currencies. So in this case, yes, we are seeing a big drop. We have already done the analysis from both ends. So sometimes it doesn't make sense to be looking at crosses. So clearly, it's a market that is having a very important and strong sell-off. So if you are still in this trade, it makes more sense to expect this bearish momentum to extend to 0.568, which is clearly a level that was previously acting as resistance, now probably turned into a support area. So it's a market that is having this big sell-off. And if you look at the trend line here, there has been a significant break of the trend line. So clearly, it's an impulse trade, and you expect the market to extend the bearish momentum here. So that's it for the day. Remember to check out the latest episode of the Bullish Banter podcast. It's available on all podcast platforms, including FXPesa YouTube. Also, remember to check out the Financially Incorrect podcast. We have our latest episode featuring the Commercial Director Africa at FXPesa, or the bigger company Equity Group, sharing some deep insights into personal finance as well as investing. So you might want to check that out. And if you're very new to trading, make sure to check the links in the description below. You'll find a link where you register for a free trading account, and you'll get a demo account where you get to practice before you eventually go to a live account. And on top of that, we have a free beginner course available on the FXPesa YouTube channel. It's called the Novice to Pro series. It will help you get started, understand some of these charts, concepts, and everything you need to know before you start trading on a live account. So that's it for the day. Enjoy the rest of your day. Remember to set notifications for President Trump's social media, because anything he tweets from today going forward is having an impact on the markets. So on top of this, if you have any Liverpool fans in the house, good morning.